Have you ever wondered why you can buy a coffee with a piece of plastic? I mean, think about it. You tap a card, money moves. The coffee shop gets paid. But where did that money actually come from? Where did it go? And who decided it could move that way? It's not like physical cash left your pocket and entered their register. Here's what nobody tells you. Every single day, banking systems make thousands of tiny decisions about your life. What you can buy, how much it costs, whether you can afford that house, whether your business idea gets funded, and most people have no idea it's even happening. Here at Simple Money, we've broken down how banking systems invisibly shape your daily choices. And today, I'm going to reveal the hidden ways banks influence everything from your morning coffee to your biggest life decisions. Once you see these patterns, you'll never look at money the same way again. So here's what's really happening with banks in your daily life. Most people think banks are just places that hold money, like a big safe. You deposit money, they keep it. You withdraw it when needed. Simple, right? Wrong. That's not even close to how it actually works. Banks don't just hold your money. They use it. They lend it. They create new money with it. They decide who gets access to it and at what price. Every time you swipe your card, check your balance, or pay a bill, you're interacting with a massive system that's making decisions about your financial life. Decisions you never explicitly agreed to. Here's why this matters so much. Banking isn't separate from your life. It's woven into every transaction you make, every price you pay, every opportunity you can access. The banking system is like the operating system of modern economy. And just like your phone's operating system, it's working in the background, making decisions, setting rules, creating possibilities and limitations. Most people never look under the hood. The first thing you need to understand is what I call the invisible hand on your wallet. Every time you use a credit card, something fascinating happens. You're not actually paying. The bank is paying for you. Then they bill you later. This seems obvious, but the implications are huge, because in that moment between purchase and payment, the bank is making decisions that affect your life. They decide if the transaction goes through. They set the interest rate if you carry a balance. They track what you buy and use that data. They report your behavior to credit bureaus. They determine your credit limit. All of this happens invisibly, instantly, without you consciously participating in any decision. Think about it this way. Imagine you have a personal assistant who follows you everywhere. Every time you want to buy something, they pay for it, but they also take notes on everything you purchase. They judge whether each purchase was wise. They decide how much they'll let you borrow next time based on your behavior, and they charge you fees based on rules you never fully read. That's what your credit card is doing, every single day. But here's where it gets really interesting. The bank isn't just passively observing. They're actively shaping your behavior. Higher interest rates make you think twice about purchases. Credit limits create psychological spending ceilings. Reward points push you towards certain merchants. Cashback percentages nudge you toward specific categories. You think you're making free choices, but the banking system is architecting those choices. The second mechanism is what I call the time tax system. Banks don't just move money, they control time. And time, in finance, is everything. When you deposit a check, it doesn't clear instantly. When you transfer money between accounts, there's a delay. When you send a payment, it takes days to process. These delays aren't accidents. They're features of the banking system, and they cost you money. Here's what most people don't realize. During those delays, your money is in limbo. You can't use it, but someone else can, usually the bank. They're earning interest on money that's technically yours. This happens billions of times every day, tiny amounts. But they add up to enormous profits for banks, and enormous costs for everyone else. Think of it like a toll road for time. You want to move money from point A to point B. The bank says fine, but it'll take 3 business days. During those 3 days, they're using your money. Lending it out. Earning returns. You get nothing. You actually lose, because inflation is eating away at your purchasing power while you wait. The time tax is invisible but constant. But the impact goes beyond just earning interest on your money. These time delays affect your life in practical ways. A delayed direct deposit means you might overdraft. A slow check clearance means you can't pay rent on time. A held credit card payment might trigger a late fee. The banking system's time architecture creates a landscape of penalties and costs that fall disproportionately on people who can least afford them. The third thing you need to understand is what I call the access gatekeepers. Banks don't just hold and move money. They decide who gets to participate in the financial system at all, and this has massive implications for daily life. Can you get a bank account? Can you get a credit card? Can you get a loan? Can you cash a check? Can you send money internationally? Banks make all these decisions based on their own criteria, and their criteria often exclude the people who need financial services most. Think about what happens if you can't get a bank account. You can't easily cash your paycheck, you can't pay bills online, you can't build credit, you can't get a mortgage. You end up using check cashing services that charge huge fees, payday lenders with predatory rates, money orders for basic transactions. Being outside the banking system is incredibly expensive. But even if you have access, banks still control how you use that access. They set minimum balances, they charge overdraft fees, they restrict how many transactions you can make, they limit international transfers, they freeze accounts based on suspicious activity they define. All of these rules create friction in your daily life. And that friction costs money. Here's what makes this particularly insidious. The banking system is supposed to serve everyone, but it's actually designed to profit most from people who already have money. If you maintain high balances, you avoid fees. If you have good credit, you get low interest rates. If you have wealth, you get access to better financial products. The system rewards being wealthy and penalizes being poor. This isn't a bug, it's how it's designed. The fourth mechanism is what I call the inflation amplifier. When banks create loans, they're creating new money. This is hard to grasp, but it's crucial. When you take out a mortgage, the bank doesn't take money from other depositors and give it to you. They literally create new money. They add numbers to your account. That money didn't exist before. Now it does. And this process affects everyone's daily life through inflation. Here's how it works. You borrow $300,000 for a house. The bank creates that money. You spend it buying the house. Now there's $300,000 more in the economy. But there aren't any more houses. So what happens? Housing prices go up. Everyone else needs to borrow more to buy houses. More money gets created. Prices rise further. This cycle continues. And it's driven by the banking system's ability to create money through lending. Think about it like this. Imagine you and your friends are playing a board game with fake money. Everything costs a certain amount. But then someone discovers they can write new money whenever they want to buy something. What happens? They buy things, but there aren't more things available. So prices start rising. Everyone else needs more money just to keep playing. That's inflation driven by money creation. And banks are the ones writing new money every day. But here's what nobody wants to admit. This process isn't random. Banks decide who gets new money. Rich people borrowing for investments get millions created for them. Poor people can't access loans, so new money flows to those who already have wealth. They use it to buy assets. Asset prices rise. People without assets get priced out. The banking system's money creation amplifies inequality while driving up the cost of everything. The fifth thing you need to understand is what I call the digital surveillance web. Every transaction you make through banks generates data. What you buy, where you shop, how much you spend, when you spend, who you pay, who pays you. All of this gets tracked, recorded, and analyzed. And this data is incredibly valuable. Not to you, to banks, to advertisers, to credit agencies, to anyone willing to pay for insights into your behavior. Most people don't think about this. They swipe their card and forget about it. But that transaction just fed data into multiple systems. Your bank now knows you bought coffee at 9 a.m. They know you spend $20 a week at that cafe. They can predict when you'll be back. They can offer you a loan for a coffee machine. They can sell this data to marketers who target you with coffee ads. Your simple purchase rippled through an entire surveillance economy. Think of every transaction as leaving a digital footprint. Over time, these footprints create a detailed map of your life. Where you live, where you work, what you value, who you associate with. Your habits, your preferences, your vulnerabilities. The banking system sees all of this. And they use it to make decisions about you. What credit to offer, what interest rates to charge, whether you're profitable as a customer. But here's where things get really concerning. You don't control this data. You can't see all of it. You can't easily correct errors, and it follows you everywhere. One mistake, one unusual transaction, can flag you as risky. Suddenly, your credit card gets declined, your account gets frozen, your loan application gets rejected. The data-driven banking system makes split-second decisions about your life based on patterns you never knew were being tracked. Let me tell you about two people. We'll call them Sarah and Mike. Both earn about the same income. Both live in the same city. But their relationships with the banking system are completely different, and it affects every aspect of their daily lives. Sarah has good credit. She qualified for a rewards credit card with no annual fee. Every purchase earns points. She pays off the balance monthly, so she never pays interest. She uses banking apps that let her transfer money instantly. She has a high-yield savings account earning interest. When she needed a car loan, she got a 3% interest rate. Her checking account has no minimum balance and no fees. Banking feels easy for Sarah, convenient, even profitable with all those reward points. But here's what Sarah doesn't fully appreciate. She's in the privileged tier of the banking system. Everything is designed to be frictionless for her because she's profitable. Not through fees and interest, but through transaction volume and data. She swipes her card everywhere, generating merchant fees. She maintains balances that the bank can lend out. She's the ideal customer, so the system bends toward her needs. Now Mike, he has mediocre credit from some past mistakes. He couldn't qualify for rewards cards. His credit card has an annual fee and a 22% interest rate. He tries to pay it off, but sometimes carries a balance. The interest adds up fast. His checking account has a minimum balance requirement. When he dips below it, he gets hit with fees. His bank doesn't have instant transfers. Everything takes days to process. He needed a car loan and got stuck with an 8% rate. Banking feels like an obstacle course for Mike. Expensive, frustrating, punitive. And here's the really painful part. Mike is trying to do everything right. He works hard. He's careful with money. But the banking system extracts wealth from him while rewarding Sarah. Mike pays interest, pays fees, pays for delays, gets worse deals on everything. Meanwhile, Sarah gets points, benefits, and low costs. The system is set up to make the rich richer and keep the struggling down. The difference between Sarah and Mike isn't character. It's not intelligence. It's not even behavior, really. It's their position within the banking system's architecture. Once you're on the beneficial side, everything compounds in your favor. Once you're on the extractive side, everything works against you. And this happens invisibly, through interest rates, fees, access to products, time delays, credit decisions, the daily influence of banking systems. Here's what most people don't realize. Banking isn't neutral. It's not just a tool that everyone uses equally. It's a system with embedded advantages and disadvantages. And your position in that system affects thousands of tiny decisions every year, each individually small, but cumulatively massive. The person who pays no fees saves $300 a year. Over 10 years, that's $3,000. Invested, that grows to $5,000. The person who gets a lower interest rate on a car loan saves $2,000. On a mortgage, they might save $100,000 over 30 years. The person who earns credit card rewards gets $500 a year in value. The person who has access to high-yield savings grows wealth faster. All of these advantages compound, and they all come from your position within the banking system. But it goes beyond just money. Your relationship with banks affects your stress levels. If you're constantly worried about overdrafts, that's mental energy you can't use elsewhere. If you're dealing with frozen accounts or declined cards, that's time and frustration. If you can't access credit when you need it, opportunities pass you by. The banking system influences not just your wealth, but your daily quality of life. And here's the uncomfortable truth. The banking system is designed to extract maximum value from everyone. But it does so differently based on your position. If you're wealthy, it extracts value through data and transaction volume while giving you benefits. If you're struggling, it extracts value through direct fees, interest, and penalties. Either way, banks win. But the experience couldn't be more different. This isn't about vilifying banks. Their business is operating within rules society set. But those rules create a system with profound daily impacts on everyone's lives. And most people don't even realize it's happening. They just know that somehow money feels harder for them than it seems to be for others. They blame themselves, when really, they're navigating a system with invisible barriers and accelerators. So what does this mean for you? Understanding how banking systems influence daily life changes how you interact with them. You start seeing the architecture, the decision points, the ways the system pushes you in certain directions, and once you see it, you can navigate more strategically. First, recognize that your banking relationships are negotiable. You're not stuck with one bank or one set of products. Shop around, compare fees, look for accounts that match your actual situation. Many people stay with banks out of inertia, paying fees they don't need to pay. The banking system counts on this passivity. Second, understand that credit is a tool, not a necessity. The banking system wants you to borrow. That's how they make money, through interest. But you can often build wealth faster by avoiding debt, despite what credit products promise. Every loan creates an obligation that constrains your future choices. Sometimes that's worth it, often it's not. Third, protect your data. Use cash for purchases you don't want tracked. Limit how much financial information you share. Read privacy policies. Opt out of data sharing where possible. Your transaction data has value. The banking system extracts that value. You should at least be aware it's happening. Fourth, build position within the system. Good credit opens doors. Emergency savings prevent fee spirals. Understanding how banks evaluate you lets you present yourself better. You can't opt out of banking in modern society, but you can improve your standing within it, and that improvement creates compounding benefits over time. Fifth, advocate for better systems. The banking architecture we have isn't inevitable. It's the result of policy choices, regulations, laws. These can change. When you understand how banking systems affect daily life, you can push for reforms that reduce extractive practices and increase fairness. Individual strategy matters, but collective action can reshape the system itself. The invisible hand on your wallet, the time tax system, the access gatekeepers, the inflation amplifier, and the digital surveillance web. These 5 mechanisms operate constantly, shaping what you can buy, how much things cost, what opportunities you can access, how your money moves through the world. They're invisible to most people, but they're working every moment of every day. And here's what this really means. Your daily life is more influenced by banking systems than you ever realized. That declined card at the grocery store, that overdraft fee that cascaded into more problems, that loan you couldn't get for your business idea, that house you were outbid on, that feeling that money is always slipping away. These aren't just personal failures or bad luck. They're often the result of how banking systems are designed and how you're positioned within them. Understanding this doesn't immediately solve your money problems, but it reframes them. You start seeing systemic issues instead of just personal ones. You recognize that you're navigating a complex architecture designed to extract value. And while you can't change the whole system overnight, you can make smarter decisions within it. You can find the paths of less resistance. You can avoid the traps. You can position yourself better over time. The people who thrive financially aren't just smarter or more disciplined. They understand the game being played. They see how banking systems work. They position themselves to benefit rather than be extracted from. They use credit strategically rather than being used by it. They protect their data, they minimize fees, they navigate the time delays. They build relationships with the banking system that serve their goals rather than just the bank's profits. This knowledge is power. The banking system influences your daily life whether you understand it or not. But understanding it gives you agency, choices, strategy. You move from being passively shaped by these systems to actively navigating them. That shift changes everything over time. Because here's the thing. Money isn't just numbers in an account. It's access, opportunity, freedom, security. And the banking system controls the flow of money through society. Who gets it? How fast it moves? What it costs to access? These aren't neutral technical questions. They're decisions that shape millions of lives every day. Your life. And once you see that clearly, you can never unsee it. The question isn't whether banking systems influence your daily life. They absolutely do. The question is whether you'll understand that influence, navigate it consciously, use that understanding to make better decisions, build a better position, Create more freedom for yourself within a system that often seems designed to constrain you.